Welcome, I'm James. After Trump's tariff speech last night, the S&P 500 crashed around 4% in after-hours trading, and it looks poised to open down about 3% today. This brings the 2025 market pullback to over 6% and about 10% since Trump's inauguration, and down about 11% from the peak in February to today. That's a decent pullback in a little over a month, but far from record-breaking. So what do you do now? Well, in short, I cannot give personal financial advice, but I can say I bought some during after-hours trading last night. So stick around as I explain why I did, and you can then decide for yourself whether my approach is relevant for you. And stick around to the end and I'll share some of my favorite stocks for you to watch today and over the coming weeks. So let's get into it. When you look at what has primarily driven the market since COVID, the Magnificent Seven that everybody talks about, the big tech stocks, they have been the ones to also lead this pullback, each having pulled back around 20% or more over recent months. So they've led the market lower and took a further leg lower last night in after-hour trading. So should you be buying the Mag 7 over the rest of the market, or should you be buying the rest of the market, or waiting for more information to come to light? Well, there's no right answer. You have to decide for yourself. But for me, one of the key distinctions to ponder is whether Trump's new tariffs are policy or politics. Meaning, are the new tariffs long-term policy or mostly a political negotiating tool? Therefore, as the coming weeks play out, maybe even months, do we see deals being made, and will the majority of these tariffs be removed? Well, firstly, what was announced last night will not come into effect until the 9th of April, so about a week from now. So we'll obviously have that time to see how fast some things can happen. Retaliatory measures, deals being made, etc. Now, obviously, alternatively, the most affected countries could retaliate and increase tariffs, which then lead to the US retaliating, and we have this horrible worst-case scenario of ever-increasing tit-for-tat tariffs. And we certainly don't want that scenario to play out. But it's a possibility, sadly. Now, we did get some hints on the answer to these questions and the likely scenario. And of course, I have my opinion on the information we've received so far. So first, the hint we received yesterday was US Treasury Secretary Bessent told lawmakers the tariffs that would be announced, which now we know of, would be the maximum tariffs the US will be instituting. And therefore, those tariffs will likely only come down from here. Now, that's obviously based on if trading partners meet Trump's and the administration's demands, but that's somewhat likely to happen as negotiations play out. So therefore, if we read between the lines and say if other countries do not retaliate or do not excessively retaliate, perhaps, then what was announced yesterday are the highest tariffs the US will initiate. So that's kind of good news. Although these tariffs are still a pretty bad short-term scenario. But as I said at the beginning, the market's off 10%. You know, a percentage of this uncertainty and bad news is priced in. But is the beginning of some certainty humming to the market? Meaning Trump has been talking since he got in, tariffs, tariffs, tariffs. And now we have, assuming we can believe everyone, this is the worst case tariff plan. So now we have some certainty. This is the cap of where things are going to get to. Now, obviously, everyone can retaliate and things change, but it's definitely a lot more certainty than we had yesterday. Now, obviously, it's bad news and the market's going to go down, but certainty is what the market craves. Also, since Trump's speech last night, many countries have already responded. The UK and Australia, if I'm caught up quickly enough, have said they will not retaliate and instead begin talks to reduce what the US has imposed, but they only had 10% each. Whereas I think Japan, India, New Zealand, Taiwan and Thailand cautiously said they're going to sort of open dialogue and see what they can do with the US. Whereas a few of the really key trading partners, Canada, Mexico, and of course China and the EU, and I think the lesser relevant but still relevant, South Korea, have all said they will begin plans to retaliate in some way. So we got to find out what that means, but we are starting to see a picture already. Many are saying, no, we're going to negotiate. Some key ones are saying we're probably going to retaliate, but by how much? Now, obviously, all of these tariffs are clearly bad news, but what else do they likely lead to? Well, they lead to central banks perhaps cutting rates or hiking rates or doing something with rates, right? Because this is economic instability. People are tightening their belts. What's going to happen next? So is this new speech and new level of tariffs likely to lead to lower rates, or perhaps lower rates sooner? Well, there's definitely room to cut rates and provide a short-term boost to get through this sort of new tariff transition period. But central banks are supposed to be independent. But the US Treasury Secretary, again this fellow Bessant, has already asked the Fed to lower them. So while the Fed's independent, they're going to be getting a lot of pressure to cut them to help get the US consumer through this sort of transition period. But really, the Fed is supposed to be tied to the economic data. And the economic data has been showing signs that cuts are on the way. So that's good because Trump wants cuts. Cuts are likely on the way. And the market's prediction for 3 cuts by year end, so a total cut of about 0.75% by the end of the year, went up kind of initially following Trump's speech. But what's the big issue with tariffs? Well, they increase prices. And what does inflation mean? Inflation means prices are going up. So how should the Fed respond when prices or inflation is increasing? Well, they should hold rates at the very least, or more likely, they should increase rates in an inflationary environment, not decrease them. So while the market thinks the next step is to cut, and it also thinks the next cut will likely come a little bit sooner since last night's speech, and even in an economic emergency, as Trump's new claim, economic data could fight the Fed's ability to cut. And also, independent of the Fed and the US, could we assume rates will be cut elsewhere around the world? Well, certainly, as recession and downturn fears rise, that is likely what happens. So we have an inflationary environment due to tariffs, at least for a period of time, weeks, months, who knows. And we have short-term interest rate cuts, which likely leads to more inflation. So how long can the tariffs remain, and how long can cutting rate trend remain when they're pushing in opposite directions? Only time will tell. So in summary, of course, this is hugely negative news today. As clearly shown by aftermarket trading, the S&P was down around, over 4% at its worst. But all things considered, right now, today, pre-market, I personally think this will likely be near the bottom of this news. Hence why I started to buy some long-term winners yesterday. But I am doing so in the face of overwhelming uncertainty. So just know that if you are doing the same, then there's a risk we're going to be timing it incorrectly. Now, that being said, I'm a long-term investor, and I'm generally speaking from that perspective. And I see long-term opportunities today, and that's why I'm making the decision. There is uncertainty, but likely, over the long term, I think adding more today or on this pullback, whether we've got to the bottom or not, starting to add here and continuing to add as it goes lower, or perhaps now is the bottom, I think both are a pretty good decision from my perspective. Now, of course, we must see how the US market opens today, and equally important, how the session plays out over the trading session to get a better indication. But as I've said in some prior videos, we should all generally respect the 3-day rule, meaning give the market 3 days to digest any significant news and establish the trend from that new news. So I will largely do that too. But I also like to be a little opportunistic on a big move day like this. We've already had the near 10% pullback, another few percent, in certain names closer to 20%. I think it's worth having a little dip from my perspective, my risk tolerance. But as this is still a highly uncertain time, and uncertainty means most investors will not be willing to take large bets today, and therefore the most likely trend is to continue down or remain around here for a few days until more countries announce what they plan to do to respond. So I'm not really expecting a instant bounce or a large bounce if there is one, because ultimately we need to see more of the real response information to come out, but that's going to come out pretty quickly, days. So we have a little dabble here, in my opinion, see what happens over the coming days. Potentially you get a chance to add some more. Potentially it's a good decision today, potentially it's not. But that's where I am. Now you know where my position is today. And therefore, ultimately, I think it is wise to keep a little powder dry, decide on your stocks to focus on, so your finger is kind of ready and on the trigger, and be ready to invest as more certainty is provided over the coming days. Because I think it will be days. Today may have been the day, but certainly over the coming days, I think we'll get a lot of the information to allow us to make a decision, which allows more investors to make a decision. And the more and more investors which make a decision, establish a trend, more likely that trend is starting to add a little here. Is it sufficient to offset the selling that's going to come from all of this tariff news? Well, it depends how bad this news turns out to be. So if I had to guess how bad this news is going to turn out to be, my guess is in a month from now, the tariffs that were announced last night will be less than what was announced. And by Q3, so in 3 months from now, I think the tariffs will be less again. And perhaps by Q4, so let's call it 3, 4, 5, 6 months from now, we're likely settled into a long-term tariff plan of around 5 or 10% flat rate across the board for most countries, with maybe the key exemption being, if you manufacture your products in the US, you get 0 tariffs. Now, this kind of plan, this low rate, long-term plan, will allow Trump to reach his sort of self-stated revenue generation goal from tariffs and his MAGA, Make America Great Again, by bringing manufacturing and jobs back to America. So he gets a little tick and looks like the leader that he's claimed to be. Fantastic. Plus, global companies will have much more certainty that by doing like a net present value calculation over, say, 10 years of the likely benefit of moving some or all of their manufacturing to the US, i.e. how much will we gain versus how much will moving manufacturing cost? That's a mathematical equation. That's not doubt. That's not uncertainty. That's, well, does it make sense or does it not? And you make the decision. So in my opinion, this is primarily a 2 to 3 month, maybe as much as 6 months, political negotiating tool and kind of uncertainty issue. And as quick as they arrive, the tariffs, they could disappear. And again, in my opinion, most likely will, not to 0, but to some long-term sort of flat rate. Although obviously I can't see the future, but you've got to guess, you've got to make a prediction on these things using as much of the information as you can. And my view of Trump and his style, he knows this is his last term. He's got 4 years. He'll want some victories quick to show his political and economic power of his tariff plan. And therefore, Trump will not want this to drag on for years. He's the art of the deal guy, right? So he wants deals as soon as possible. And then hopefully he'll be able to see long-term benefits of his deals to arrive during his presidential term. If I'm right, then investing now, and perhaps investing more over the coming weeks and months, will prove to be a great decision. Sadly, though, it's a really big if in this moment, though. Now, as promised, which names are my shortlist names? Firstly, Amazon and Google. Both of these names have powerhouse businesses and substantially discounted today to just a week ago or a few weeks ago. Also, if you wanted to have some slightly more risky very long-term names, in my opinion, you could add businesses like Novo Nordisk, Alibaba, Nvidia, Tesla, and Chinese equivalent BYD. Now, on the safer side, you could simply start to dollar cost average, meaning you buy a little bit, perhaps even double what you would normally buy, like I've said in my other videos. You could dollar cost average into the QQQ, the tech sector, which is down over about 15% from its peak in late February, or the S&P 500, SPY. Now, as I said in my previous videos, if you invest regularly to compound your returns, then a great way to enhance that long-term compound effect is to add more than you would typically add during a 10% or more pullback, as we often get one maybe of these each per year. So here it is, folks. Now, of course, will it become a 20% or more pullback? Well, if you think so, then also be ready to add more then. Or wait for then. There isn't a right answer here. You need to decide. I'm just presenting the information. So you've got a chance now to maybe digest it. Ultimately, good luck, folks. It's a very, very interesting economic time. Obviously, more videos to come, so please subscribe to follow along. See you all soon.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.